Last Friday, silver did something that should make anyone who follows markets stop scrolling and lean in, because this wasn't just another volatile day or a headline-driven spike. While traders were busy arguing about margin hikes, futures expirations, and normal profit-taking, silver quietly revealed a pattern that doesn't belong in a free and healthy market. For hours, price moved as if it were hitting an invisible wall, repeatedly rejected at nearly the exact same level, while gold, its closest cousin, traded freely up and down like a normal asset responding to buyers and sellers. The contrast is the real hook here. Markets can be volatile, emotional, even irrational, but when one metal is capped with machine-like precision while another is not, it raises a serious question. Is this price discovery or price control? And that question matters far more than whether silver closed up or down on the day. Because silver is not just another commodity, it sits at the intersection of money, industry, and trust in the financial system. For years, it has lived in what many investors call a price prison, lagging behind inflation, money supply growth, and industrial demand, while currencies quietly lost purchasing power. That kind of imbalance doesn't resolve itself smoothly. It builds pressure. What we saw on Friday may have been a glimpse of that pressure leaking out and being forced back in. This video isn't ET about shouting manipulation at every red candle or pretending every strange chart proves a conspiracy. It's about understanding structure, history, and incentives. Precious metals markets have a documented past of intervention, fines, and rule changes, so unusual behavior deserves analysis, not dismissal. In the next few minutes, we're going to break down what actually happened in silver, why the silver versus gold relationship is more important than the spot price everyone watches, and why many experts believe 2026 could be a defining year for silver, despite, or perhaps because of, these strange moves. If you care about where this market is heading, not just where it closed yesterday, this is a conversation you can't afford to ignore. The silver market did something strange, and if you weren't watching closely, you probably missed the signal. On the surface, last Friday looked like just another volatile trading day. Prices moved, charts printed candles, commentators argued about margin hikes and futures games. But underneath that noise, something far more important was happening. Silver wasn't behaving like a free market. While gold moved naturally up and down, silver hit an invisible ceiling. Over and over again, the price was pushed back the moment it approached the same level. This wasn't random. Markets don't repeat the same rejection point unless something is enforcing it. Whether it's algorithms, large institutional players, or risk controls at bullion banks, the message was clear. Silver was being capped. And when a market is capped, pressure builds. History shows that suppression doesn't eliminate demand. It delays price discovery. The longer price is restrained, the more violent the eventual move becomes. This is why experienced traders don't ignore strange price behavior. They treat it as information, not proof of manipulation, not conspiracy, but a sign that silver is approaching a zone where control becomes expensive. When maintaining the cap requires more effort than letting price move, the structure breaks. That's when markets reprice fast. And to understand why this matters, you have to look beyond silver alone and compare it to gold. Gold has been allowed to move. Silver hasn't. That distortion is the real story. The silver to gold relationship recently broke out of levels that rarely appear in decades of data. This ratio doesn't change quietly. It compresses for years, sometimes decades, then snaps back with force. People who only watch spot price miss this completely. The ratio tells you whether silver is cheap or expensive relative to monetary reality, and right now it's telling us silver spent years in a price prison. During that same time, money supply exploded, debt normalized, and confidence eroded. That gap never closes slowly, it stores energy. When normalization begins, it doesn't drift upward, it jumps. We've seen this in other metals that sat in ranges for years before exploding higher and establishing entirely new price floors. The mistake most people make is assuming the future must resemble the past. Markets don't move that way. They stay boring until they aren't. And when silver wakes up, it doesn't ask for permission. Industrial demand adds another layer that makes this cycle different. Silver is no longer just a monetary hedge. It is a critical industrial input. Solar panels, electric vehicles, advanced electronics, data centers, and AI infrastructure all rely on silver's unmatched conductivity. There is no scalable substitute. You can't replace silver in these applications without sacrificing efficiency or durability. This means demand is no longer optional. It's structural. Governments can slow it. Prices can delay it, but they cannot eliminate it. At the same time, supply is not responding the way textbooks say it should. New mines take years to develop. Grades are declining. Costs are rising. And political risk is increasing in many mining jurisdictions. This creates a dangerous imbalance. When investment demand meets industrial necessity, price becomes the release valve. That's why silver doesn't move like a typical commodity. It behaves more like a pressure system. Stable for long periods, then suddenly unstable when conditions align. Now layer in the financial system. Fiat currencies are losing purchasing power quietly, not through dramatic collapse, but through steady erosion. Official inflation numbers understate this reality by focusing on selective baskets. Silver exposes the truth because it reflects both monetary stress and physical demand. That's why analysts who rely on models consistently miss major moves. They measure paper flows, not structural strain. When silver breaks out of long term compression, forecasts become useless. The market stops asking what's fair and starts asking what's available. That's when volatility accelerates, not because of hype, but because positioning is wrong. Too many participants are leaning the same way. Too many assume pullbacks must come. And when they don't, price gaps instead. This is how late cycle moves unfold violently, unevenly, and without regard for comfort. So, what happens next is not about predicting an exact price, it's about recognizing conditions. Silver is no longer behaving like a suppressed asset stuck in a range. It's behaving like a market transitioning into repricing mode. That doesn't mean straight lines. It means sharp rallies, brutal pullbacks, and constant attempts to shake people out. This phase rewards patience, not leverage. It punishes emotional reactions. The real risk isn't volatility. The real risk is assuming stability will return simply because it existed in the past. When markets leave equilibrium, they don't come back quickly. They overshoot. That's how they reset belief. The takeaway is simple but uncomfortable. Silver isn't just moving, it's changing character. The strange behavior you saw wasn't noise, it was the market telling you control is weakening and pressure is rising. Whether the breakout happens tomorrow or months from now matters less than understanding the setup. When price is capped while demand grows and trust in money fades, the resolution is never subtle. The people who benefit aren't the ones chasing headlines. They're the ones who recognized the signal early and respected what it meant. Because by the time silver's move feels obvious, the opportunity phase is already gone.
Hello friend, welcome to my YouTube channel. I hope all if you are doing great and having an amazing day. My name is Noor Baqi and I am really excited to start this new journey with all if you. You know this channel is not just about videos, it is about story and ideas and inspiration. I created this channel to sharing something positive every signal week. Sometimes we all need little motivation, and sometimes we just need a good story to smile again. Decide exactly what this channel is all about. You find understanding stories, real life experience, and powerful lessons that again change the way you think. I be uploading new videos regularly. So if you don't want to miss any of them, make sure to subscribe to my YouTube channel and press this bell icon so you get notification whenever you post something new. Your support means everything to me, and to great we can build a community full of fraternity, learning, and good vibes. So sit back, relax, and let us begin this amazing journey together. Thank you so much for watching and welcome once again.